Have you ever felt a small tremor beneath your feet? The kind that tells you something big is shifting? That's exactly what's happening in the global economy right now. People think we're heading toward a simple correction. But what if the crash of 2025 makes 1929 look like a minor warning? And here's what scares me the most. Almost nobody is ready. Stay with me, because in the next few minutes you'll understand the one pattern that predicted every major collapse in the last century, including the one forming right now. A quiet tension running beneath everything, not noise, not chaos, but the subtle calm that comes right before a storm. It's the kind of silence that makes you stop and ask yourself, why does everything feel slightly off, even when the world looks normal on the surface? People talk about market corrections and soft landings, but the signals we're seeing today show something much bigger is unfolding. We're not drifting toward a small dip. We're approaching a moment that could define an entire generation. What if the crash of 2025 doesn't just resemble past crises, but completely overshadows them? What if the financial shock we may face makes 1929 look like a warning sign, and turns 2008 into nothing more than a rehearsal? And the most concerning part is this. Almost nobody seems prepared. Not governments, not institutions, not everyday people. To understand why 2025 could be so different, we need to go back to where the pattern first became impossible to ignore. 1929. The Roaring Twenties were an era of enormous optimism. Radios, automobiles, and electric appliances were transforming everyday life. People believed the future could only get brighter. Money was flowing. The stock market seemed unstoppable. Families who had never invested before were suddenly borrowing money to buy stocks, convinced they had discovered a guaranteed path to wealth. Banks encouraged it. Newspapers celebrated it. Society embraced a dangerous belief that the good times would last forever. But beneath the excitement was a truth no one wanted to face. The entire boom was built on fragile foundations, excessive debt, speculation, and unchecked confidence. People weren't investing with caution. They were gambling with borrowed money. When the bubble burst in October 1929, it didn't just take down the stock market, it brought down the entire financial system. Banks closed, businesses collapsed, millions lost their savings overnight, and the world fell into the Great Depression. The lesson from 1929 is painfully clear. When a system is built in debt and arrogance, the fall is always faster and far more destructive than anyone expects. Now, look at where we stand today. We're living in another age of extraordinary innovation, artificial intelligence, electric vehicles, robotics, biotechnology, space exploration. Technology is moving faster than any generation in history. Markets have reached heights that once seemed impossible. The world feels advanced, efficient, and unstoppable. But beneath that progress is a silent threat. Debt hasn't just increased, it has exploded. Government debt is at unprecedented levels. Corporate debt is massive. Household debt, credit cards, student loans, mortgages, WASFIS has reached critical heights. And unlike 1929, when debt stayed mostly within borders, today's global economy is completely interconnected. If one major economy stumbles, the impact doesn't stay contained. It spreads, it accelerates, it hits every corner of the world. This alone makes 2025 fundamentally different. But it is only the first danger. The second danger is something economists now call the everything bubble. In 1929, the bubble was mainly in stocks. Today, nearly every asset class appears inflated. Stock prices, real estate, cryptocurrencies, bonds, commodities, luxury goods, watches, cars, artwork. Even digital collectibles. For over a decade, interest rates were near zero. Central banks printed trillions of dollars. Money became cheap and risk became invisible. People took chances they would never consider in a normal economy. This didn't create one bubble. It created many. All connected and all vulnerable. When the correction comes, it won't be one market collapsing. It could be everything collapsing at once. A scenario the world has never faced before. And then comes the third danger. The most underestimated one, the speed of panic. In 1929, fear moved slowly. People reacted over days and weeks. News traveled through newspapers and radio broadcasts. Today, panic moves instantly. A single viral tweet, a negative headline, a glitch in an algorithm, and billions of dollars can vanish in seconds. Modern markets are digital. Trading is automated. Social media amplifies fear like gasoline on a flame. The bank runs of the future won't be lines of people outside buildings. They will be millions of people tapping their phones at the same moment, withdrawing their money instantly, freezing the system before anyone can respond. So why is nobody preparing? Because we've been conditioned to believe the system will always save itself. We've survived the dot-com crash. We've survived the 2008 meltdown. We've survived a global pandemic. And every time central banks stepped in, they printed money, they slashed interest rates, they bailed out institutions, they propped up markets. People began believing the system could never truly break. But here's the truth. Few are willing to admit. The tools that saved us before are the same tools that created today's fragility. Interest rates are already low by historical standards. Money printing now risks triggering even more inflation, and debt levels are so extreme that central banks have less room to maneuver than ever. They are cornered, out of moves, running out of options, and the next crisis may be the first one they genuinely cannot stop. So what does this mean for you? It means awareness isn't optional anymore. It's essential. History rewards people who prepare early, and it punishes those who ignore the signals. The first step is understanding the risks, global debt, inflated assets, and the speed of digital panic. The second step is examining your own financial life with honesty. Are you over-leveraged? Is your money concentrated in risky places? Do you rely on a single income source? Do you have liquidity? Do you have diversification? These questions aren't fear. They are survival. They are intelligence. People in 1929 didn't know what was coming. People in 2008 didn't want to see it. But today, the signs are everywhere. In rising prices, in political tension, in financial stress, in frustration people feel every day. History doesn't repeat itself exactly, but it always warns. And when we don't listen, it forces us to remember the hard way. If this helped you see the bigger picture, don't forget to like the video and subscribe, because in the next videos, we'll go deeper into the exact strategies that can protect you and your family. Before the tremors turn into a full earthquake, stay informed, stay aware, and stay ready.